Okay, we've got a few more questions. This viewer is asking, I file my own income tax returns using TurboTax because currently it's still pretty straightforward as a medical student without really any income. Is there a time when you would suggest us to seek a tax professional in the course of our career? And the examples given are during residency, when we start making money, or should we wait until we are attendings and making more money and considering to incorporate?
Yeah, I think just as a general answer to that question, what I always tell people is that, if you're comfortable doing your own return, keep doing it. I think it's great that people are able to do their own returns and help understand how the tax regime works, et cetera. I think that's great. If you get to a stage where you're not comfortable, and that can happen for a variety of reasons, like maybe your situation gets more complicated, maybe the numbers start getting bigger, and you look at them and you say, well, my risk of error being 5% off on a low amount certainly isn't as risky as being 5% off on a very large amount of income, as an example. These are things you'd want to consider in terms of when to seek professional help. But if you're comfortable doing them and the assessments are coming back clean, et cetera, there's no need to rush out and get professional help. There was somebody asked a question about moving to the US, or specifically in my presentation, I alluded to doing a residency stint in the US. I think if you're dealing with cross-border issues at all, my advice is definitely get professional advice on both sides of the border. So our firm deals with a firm in Michigan that helps us with the US filings. We don't do the US returns in-house. So just to give you a sense, I can advise as a Canadian practitioner, I could advise on the Canadian side, but I would be fraud or wouldn't be good if I was giving advice on the US side. So I think getting advice from both sides in that example is going to be important. And then in terms of when to incorporate, one advantage of connecting with an advisor, even if maybe a year or two before you're ready to incorporate, is that they can help direct you on when is the right time. Because if you wait, you might go 3 years past when it made sense to incorporate, and you would have missed the boat on those 3 years. So one extra thing to consider is just is there any merit in starting a relationship sooner rather than later, with a view toward it? Eventually when things go as planned, you're going to want to incorporate down the road, and you'll be sure that you have the right timeline to make that happen.
What are the right questions to ask when hiring a lawyer or a tax person to assist with incorporation?
So I think for a lawyer, it's more getting their input on whether or not they're familiar with setting up professional corporations specifically. As I mentioned briefly in the presentation, there are nuances to be aware of in what's allowed legally, depending what province you're in. So I think when you connect with a lawyer, you'd want to say, are you used to setting up professional corporations in Nova Scotia or in Ontario, for example? I was dealing with a lawyer. For whatever reason, the client found a lawyer in Quebec and was trying to set up an Ontario corporation. And my advice offline to the client was, you might want to consider getting an Ontario lawyer involved, because there's some cross-border things that make it more cumbersome. In terms of what to ask your accountant, I think posing questions just like the ones you guys are asking right now are all great questions. And I think you get a pretty good feel pretty quickly whether or not there's going to be a right fit. If you start asking things about when to incorporate and you don't get the warm and fuzzies in terms of the answer, that's probably a sign that you might want to consider somebody else.
Can you incorporate if you're a salaried physician as opposed to a fee-for-service or capitation? So I don't know if you're familiar with these different payment models, Jacob, but that's the question.
Yeah, so it's a great question. Unfortunately, if you're working in an employment capacity, you can't incorporate. There's specific rules that kind of say you can't incorporate as an employee, essentially. It's only in the kind of fee-for-service model where you're working as a contractor, essentially, that you'd have the ability to incorporate. So unfortunately, in an employment scenario, your hands are a bit more tied in terms of what tax planning we can do.
If you wanted to invest in real estate with money from your incorporation, is it advantageous to buy the property in the corporation's name, or should you have a holdings company? Do the capital gains upon sale of the property have higher tax implications if you purchased it personally or through a registered business?
So I think there's a number of questions that I'll touch on this one all in one. The first question, should you buy the property inside your company or personally? If you were to buy the property personally, and you think about kind of coming up with money for the down payment or making payments on it throughout the course of ownership, if you owned it personally, your question would be, well, how do I get the money in my pocket so I can turn around and pay the bank or whoever it is I'm paying? In order to do that, you got to take salary or dividends out of the company. And so I kind of alluded to in the presentation, the whole idea of the biggest advantage is deferring tax. And the only way you do that is by leaving the money inside the corporation. So to the extent you're drawing more and more money out of the corporation personally, what it's going to mean is a higher personal tax bill, and that you're not going to get the same advantage you would otherwise in terms of the deferral. So for that reason, it's generally going to be most advantageous to own investments or real estate or what have you, to make those investments at the corporate level. And by making the investment at the corporate level, you're using, upwards of, 40% more capital, because you're taking advantage of these low corporate rates. You're taking advantage of 40% more capital to make the investments. The second question that was kind of loaded into that question was, well, do I make the purchase inside my professional corporation or inside what would be a holding company? The biggest determining factor there's really two things to be aware of. One would be liability concerns. So if commingling all your assets in your operating business, you'd want to get legal advice whether or not that was a good idea. Like, as a tax advisor, I can't speak to liability, but that would be one consideration. And probably the second thing and most important would be, is your business saleable or not? So if you're a dentist, generally you wouldn't make those types of investments inside your DTC, because eventually it's going to be a saleable thing. If you're a general physician, and it's very unlikely that you're ever going to sell your business down the road, stockpiling those assets from a tax perspective inside your professional corp makes sense from that perspective. Whether you buy the assets or investments inside a holding company or inside an operating company makes no difference from a taxation perspective in terms of the tax benefit you're going to get, in terms of the deferral, the rate you're going to be subject to on investment income, or the rate you're going to pay on a capital gain. So OpCo versus HoldCo makes no difference from that perspective. It's really just, is your business saleable and what's the liability exposure?
How many years can you carry your tuition credits forward?
You can carry them forward indefinitely. Yeah, so we've got some folks who, accumulate credits, then they go down to the States and become a non-resident for 10 years and they move back to Canada. Well, when they move back to Canada, those credits are still sitting there and can be used on a go-forward basis.
Is it true that you can only transfer tuition credits if your salary was under a certain amount?
Yes. So you can only transfer tuition credits to the extent you don't need them personally. And when I say you don't need them personally, basically you have to have brought your taxable or your taxes payable to zero and still have tuition credits there from the current year in order to be able to transfer them. So in theory, if you've got a high salary, it would dictate that you would have to use all your credits in that current year.
What are your thoughts on leveraging your line of credit for real estate investment from a tax point of view?
That's a great question. So if you're borrowing money to make any kind of investment, as long as that investment is going to result in taxable income, the interest is going to be deductible. So anytime you're borrowing with the idea of buying, say, a rental property, or you're going to buy a stock portfolio or whatever it is, one benefit you get from a taxation perspective is any interest you're paying is going to be deductible. Compare that to, like, if you run out and you borrow money and you buy a personal house, that interest isn't going to be deductible in the same way it would be. Whether or not there's merit to making that type of investment and leveraging yourself in that manner I tend to shy away from giving investment advice in general. But the only thing I would say is you really got to make sure you understand yourself and your own investment philosophy, because I've got clients who do this, right? And, you know, they're the type of person who stays up at night worrying about things. Like if you're that type of person, leveraging yourself to make an investment might not be the best thing. But if you're younger and you're more risk tolerant, you know, it is a great way to build up your net worth pretty quickly if you can do it.
All right, looks like we have our final question for the day. I've heard that it's a pain to file taxes in Quebec. So did everything you talk about in terms of incorporation laws all apply if we end up working in Quebec?
Yeah, so one thing, couple things about Quebec. We see a lot of Quebec filings in Ontario. Being in Ottawa, we're right at the Quebec-Ontario border. So we deal with Quebec quite a bit. And one thing I would say is that the returns are a little more complicated. Quebec is a province that files, you have to file a separate standalone provincial return to Revenue Quebec, and you file your federal return to CRA. So that you're doing what is a physically separate tax return as a resident of Quebec. The other thing is that their tax rates are pretty well the highest in Canada. So I alluded to how Nova Scotia and Ontario rates are roughly similar. Quebec is right up there with us, if not slightly higher in terms of the taxation rate. Aside from those things though, like in terms of the merits of when to incorporate some of these different credits that we talked about, et cetera, there really isn't that much added complexity. One thing that's really important to note is that sometimes depending on where you earn your tuition or where you pay your tuition, because it's not in the province of Quebec, sometimes there's a few hoops you have to go through to be able to have Quebec recognize tuition credits carrying forward. So if you are thinking of moving to Quebec and you're on the fence whether to transfer the tuition to a parent or let it roll forward, you may be better to try and transfer them, because it is a bit of a headache trying to get Quebec to recognize those tuition credits transferred.